Hello and welcome to the weekly commodity market update. I'm Brownfield's Will Robinson, joined as always by the University of Missouri's Ben Brown. How's it going, Ben?
Hi, Will. I'm good. And you?
I'm doing well. Although this weekend I hear you're not just the University of Missouri's Ben Brown, you're Mr. K-State Ben Brown as well.
No, yeah. So my teams played each other this weekend. My two schools, K-State and Mizzou. Mizzou emerged victoriously. It was an amazing game, and a 61-yard field goal to win it as time expired. Can't get any better than that. So
You can't. No, it was a pretty cool game, a pretty good one to watch. I'm sure it was a really electric one to be at.
yeah. Not only that, they took a delay of game to move it from a 56-yard field goal to a 61-yard field goal. So
Just
suspense
to get the
built.
record. Yeah.
Yeah. Wanted the record. Yeah.
All right. So real quick, before we dive into too much here, I want to give a recap and rundown on prices. December 23 corn was down 14 cents on the week at 471. November soybeans for 2023 down 53 cents at 13.16. Soybean oil for October was up 1.05 cents at 62.39. Soybean meal by the short ton down $15.60 at 390.40. December 23 wheat crop up 7 cents at 591. July wheat for the 24 year up 3 cents at 640. And then crude oil by the barrel for September up $3.41 at 89.28. So Ben, what are your initial thoughts there as we get rolling?
Well, I think probably one of my initial observations is that soybean complex really had kind of an interesting week. Maybe some bullish fundamentals early on the week as we got the updated supply and demand estimates from USDA, but then kind of finished on a little bit of a sour note with the National Oilseed Processors report really showing a multi-year, well, it wasn't a multi-year low, but it was, lowest we've seen for several months, and even in that soybean oil category, lowest oil stocks number for the month of August since a couple of years, and those were just kind of opposite poles. One was bearish, that soybean crush, and then the soybean oil number was very bullish. But I think as people started to realize that, hey, the soybean oil stocks number was low because we didn't crush many soybeans or as many soybeans, then expectations in the market started to moderate a little bit. So again, soybeans just kind of had a sour end to the week there.
Well, just on the, recapping the USDA supply and demand numbers that came out last week, looking at how tight the market is heading into harvest, how do you think that's going to play a role as we have now entered, kind of the beginning phase of harvest? How closely are these yields going to be watched as we go through the month of September and October?
Sure. So corn yields can change. I'm not saying that they can't change between now and January or, now and any month coming up, but I think we're getting a pretty good idea of what that corn yield will be. USDA did cut it 1.3 bushels per acre this month. However, we had a little bit higher acreage, about 800,000 more acres than what we did in August. And so as a result, we actually saw ending stocks for the new crop marketing year increase 19 million bushels rather than decrease like the trade was expecting. So that was kind of a notable, moment there. I will, again, I'll say that it's not that corn yields can't change, but I think we're getting pretty close to finding out what that yield might be. On the soybean side, we saw soybeans production decline. Some we saw, demand come down as that number declined. And we're at a point where, gosh, if we reduce the soybean yield much more, which it's still possible we can here in the next couple of months, we're in a very tight supply picture for our soybean market. So, the ending stocks number there was lowered for new crop soybeans, 25 million bushels. That season average price was increased 20 cents per bushel, and that implies a 5.2% stocks use ratio. And as just kind of a reference point, that's down from 5.8% last year for last year's tight crop.
And really, that just kind of furthers the highlighting of the tightness that we're seeing, especially on that soybean front. The margins there seem to be pretty thin, and Brazil and South America has really dominated the export market. But we had another report coming out at the end of last week that was pretty influential for soybeans with the NOPA report, the National Oilseed Processors Association. They had a report out on Friday that showed that the crush numbers for soybeans dropped quite a bit, coming down from August. Ben, what's your takeaway from that?
I was a little surprised to see as big of a drop, especially, given where the trade expectations were heading into that report. It didn't fall below all expectations, but it was certainly on the lower end and just kind of very, closely eclipsed that lowest estimate of the trade range. So, I think that surprised me a little bit. I do think that end users were, struggling to, or let's put it this way, they had no incentive to store grain this summer. And so I think their plan was to buy, soybeans and corn right at harvest, basically end all their supplies of old crop right at harvest. And as a result, I think given that harvest has been a little bit delayed in some parts of the country, not all parts, there's other parts where harvest is moving along very quickly. I think it allowed soybean processors, a little added time for shutdowns and maintenance and stuff like that. So a little surprised by it. I think we'll come back from this. I don't think this is a trend going forward that we're going to see, lower than expected soybean crush numbers for several consecutive months. Like I think we'll rebound from this.
Well, looking at the producer's standpoint, growers out there across the Midwest and other regions, you talk about there not being much incentive on storing things last year, and it being kind of a seller's market. How do you, I guess, look at that flipping into this year once we're going through the harvest now? What do you think the tone and the belief is going to be, or the actions might be as we move through harvest? Are you going to see maybe a little bit more storage, but still aggressive selling?
Sure, I think we are. I think as the corn market and the basis markets kind of softened a little bit, I think you're seeing a little bit more. Well, you are seeing an incentive for producers to store, maybe do a storage hedge with March or May delivery, and so we are seeing a little bit more incentive. And I do think producers are storing because for many of them, the cash prices that are being offered here at harvest are below break evens. Probably some of the delivery that we're seeing was priced earlier this year and at higher prices. So we probably are seeing some delivery, but for folks that haven't priced anything, we are probably seeing that incentive and desire to store.
Ben, so looking forward, we have grain stocks reports coming up and some information to get there. What are your expectations as we move into October and get that October 1st outlook?
Well, September 1st outlook.
September 1st
September 1st. Yep. So it come at the end of the month for September 1 grain stocks. This one's always an interesting one because for corn and soybeans, this represents the final ending stocks for the marketing year. For 2022-2023 marketing year, this will be the ending number. And we've seen USDA in some years go back and actually revise the previous year's production numbers. They have the ability to go back and revise all prior 4 quarters of the marketing year, or I guess 3 other. There's 4 total, and so they can revise the other 3 as well during this report drop. So this one's always kind of an interesting one. I think for me, what I'm most interested in seeing is corn on hand and getting a better idea of what we were just talking about, with farmer preferences to hold corn in some of these drought areas where we see drought and high feeding or high livestock concentration. Is there a lot, how much corn is actually in those pockets, because that's really going to kind of dictate some of those basis bids. So I think that's the part of the September 1 stocks report that I'm very interested in. I would say the second part is just overall soybean stocks. There is a chance that overall soybean stocks could actually come in below expectations here. That would just further tighten this soybean market as we start to think about harvest here in October.
So the message, tight soybean markets and maybe some flexibility there in the corn side.
Yeah, so tight soybeans markets and maybe even getting tighter.
There you go. Well, Ben, looking forward to the rest of this week. What should farmers and ranchers be paying attention to?
Well, so my favorite part of this upcoming week, I shouldn't say my favorite, but the thing I'm probably going to be the most interested in is we do have that Federal Reserve Open Market Committee meeting and their press conference at 1:30 on Wednesday. This is the Federal Reserve September meeting where they're going to take a look at, do they increase interest rates or leave them the same or decrease them? We've seen some mixed signals. I think some in the inflation and jobs markets. We saw unemployment tick up a little bit last month. That was largely due to added, workers coming back into the workforce. We saw inflation come down for some categories, but we also saw inflation go up for energy markets. And certainly what we've been talking about with oil here the last couple of weeks, I think that's going to continue. And I think we're going to see more pressure in inflation in the economy. And so, as a result, what the Federal Reserve does at this meeting in September, I think is really going to set up, the remaining 2 meetings of the calendar year, and could be a very, interesting end of the year. Outside of that, cattle on feed at 2 o'clock on Friday. Everything else is pretty standard for us. So those are the big reports this week.
All right, Ben, thanks. And if you want to learn more about that cattle on feed report, definitely check out our sister program, the weekly livestock market update. And for more on us, you can check us out at brownfieldagnews.com. Ben, it's always a pleasure. I'm Will Robinson on Brownfield.